Have you started to educate yourself about the process of buying a house? If so, maybe you've done some checking either online or even over the phone or in person to inquire about rates and payments from a mortgage professional. But if you're like many, this may have left you even more confused. Are you left wondering, what are all these fees? Does every lender charge these? Is this a good deal? Where do I even start? Well, fear not. In less than 10 minutes, I will show you the easy way to figure this out so that you can know exactly how to shop for a mortgage loan and feel confident that you're getting the best deal. So let's get started. Hey guys, it's Ron Piro, the Loan Professor. Navigating and understanding closing costs for a mortgage loan can feel confusing and even overwhelming at times. After all, you want to try to get the best deal and avoid getting ripped off with high fees and closing costs. When you see all the numbers and the figures, it can seem so confusing. Because of this confusion, most people only focus on trying to find the lowest possible interest rate without really putting too much thought into what fees the lender might be charging them. Now, because of this, many people end up paying more in fees than they would really need to. So what can you do? The process of applying and shopping feels so complicated and confusing. It seems like each lender charges different things and they have so many strange names, and it's so hard to know what is normal and what you can negotiate on and what you can't, etc. So as I just mentioned, many people tend to fixate on what interest rate the lender is offering to them, and then they tend to go with whomever can offer the lowest rate without really focusing too much on what they're being charged and lender fees. After all, an interest rate is a nice simple number, and it's pretty easy and straightforward to understand that lender A is offering one rate and lender B is offering a rate that's maybe half a percentage point lower, so it seems to make the best sense, or it might be the best deal, to just go with lender B. But the truth is that rate is only part of the story. To truly know that you are getting the best deal, you do want to consider both the rate and the fees that the lender is charging you. So this begs the question, how do I know what the lender is actually charging me? Well, the answer to that lies in a special document called the loan estimate. Lenders are required to provide this to you within 3 business days of whenever you make application. You can download a sample loan estimate, the document that you see on the screen here in the description for this video. But if you don't download this, I highly suggest that you make a note of this document, again called the loan estimate. So here you're going to find all of the specific or key details about the loan that you're looking at. So here you can see they cover the loan amount, the interest rate. Down about the middle of the page, you can see what the estimated monthly payment will be. In the bottom right, you can see what your closing costs will be. They also show you what kind of cash you're probably required to bring to the closing table. On the right hand side at the top, you can see what loan term you're looking at, what the purpose is for your loan. So whether it's a refinance or a purchase or what have you, what kind of product you're looking at, and also what loan type. So whether it's a conventional, an FHA, or a VA. But the key thing that you really want to pay attention to is that we're covering today is on page 2. So this one is called closing cost details. If you notice, this document is broken down into 2 columns, and we really want to pay close attention to the left side here. So the left column of this document we can see has sections A, B, C, and D. Now section D is really just a summation of the other 3. Section C is called services that you can shop for. Section B is actually services you cannot shop for. Now, to be honest with you, the items that are listed in section B and C are going to be very highly regulated and very standardized. So therefore, it's not going to be very worthwhile for you to try to spend much time focusing or worrying about the costs here, because they will be very standard from one lender to another, even if they do have slightly different names. And there's not really much room for you to negotiate or save very much here. That's going to be about the same cost from one lender to another. However, you do want to pay very close attention to what you see in section A, origination charges. Here's where you're going to see all of the charges that the lender is charging. Now, there's legitimate reasons for the lender to charge things here. For example, if they are buying down the rate for you, they may have to pay discount points to get that rate. Or maybe they have to pay for a processor. Maybe that's someone who works in their office. Maybe it's someone who is outside of the office, but that would also be listed here. Or you might just see other lender charges. Maybe this is how the loan officer is being compensated. Everything is legit here, but this is where you can actually compare from one lender to another. So for example, maybe lender A is able to offer you a rate of 7%, but they have very low rates or low fees in this origination charges section, versus lender B is saying they can offer you 6%, but then when you look to this section, there's substantial fees. At that point, you would have to evaluate, well, how long do I think I'm going to be in this house? Because maybe if you're only going to be in there for a couple years, you're never actually going to be able to make enough payments to justify paying a higher fee, because the difference between scenario A and scenario B isn't enough to pay off the extra cost you had to get that lower rate. So once again, just remember, this document has to be provided to you every time when you apply for a loan. And also, you can safely apply between 2 and 3 different lenders as long as you do that within a relatively short time, so say 30 days. If you do it that way, the credit bureau is only going to count this as one inquiry against your credit score. So this way you can apply at maybe 2 or 3 different lenders and actually ask them or get a hold of the loan estimates for those lenders, and that way you can compare and say which one is giving me the best deal, the best rate, and the best fees. So that's how we do that. So in conclusion, understanding the intricacies of closing costs and lender fees is crucial for prospective homebuyers. While interest rates are important to look at, they should not be the whole story. By scrutinizing Section A of page 2 of the LE, where origination charges are listed, you can make well-informed decisions that align your financial goals and homeownership plans. The bottom line is, you do really need to pay attention to what fees the lender is charging you, as well as what interest rates they're offering. Remember that when you apply for a mortgage loan, the lender must provide you with a loan estimate within 3 business days. You should always look for this document and always turn to page 2, section A at the top of the page, and make sure that you compare the fees that you're being charged in addition to what rate you're being offered. If you follow this simple advice, you can be sure that you're getting the best deal. Well, I hope you found this video helpful for you today, and happy home buying.